Welcome back, and thanks again for watching our video series. In the last video, we discussed down payments, and as promised, today we're going to discuss different types of loans. Specifically, one of our favorites, the Zero Down Loan Program. Joining me today is my partner, Toni Eads, and our preferred lender, Brandy Jones with Union Home Mortgage. And again, we want to thank Dylan Lee for providing us with this beautiful model home here at Silverthorne Homes.
Thank you, Toni. So affordability is always one of those most important items in buying a house. Buying a home with zero down sure does sound attractive. Brandy, tell us more about these programs.
Thank you, Toni. So zero down loan programs are an excellent way to get into a home with little money out of pocket. The most common loan programs that are 0% down are going to be VA, USDA, and down payment assistance programs.
So share with us who would qualify and typically what area you could qualify a USDA home loan.
Sure, so USDA loans are perfect for low to mid income buyers who are looking to purchase a home outside of the city. These are also referred to sometimes as rural development loans because they are meant specifically for buyers looking to purchase in more rural types of locations. The government backs them in order to encourage people to purchase in less populated areas. In addition to location requirements, there are also income limitations depending on the location and household size.
So keep in mind, the word rural doesn't necessarily mean way out in the country with acreage. I've been pleasantly surprised that several of my clients have qualified with USDA loans with homes that are just outside the suburbs of Indianapolis. We help a lot of buyers do the USDA loans in Danville, Pittsboro, Mooresville, Canby, Martinsville, Whitestown, Whiteland, parts of Franklin, McCordsville, and there are many other great towns. The great thing about working with Brandy is that she will check to see what the best program is for you and let you know if you and the property qualify for this type of loan. So Brandy, what are some of the other qualifications for USDA loans?
Sure, so there are slightly higher requirements for credit score. Generally, we need to see about a 640 to a 660 credit score. Also, even though you may not need a down payment, you may have to have some money in savings to get approved. Also, the mortgage insurance or funding fee in this case that's added to your monthly payment is smaller than with conventional and FHA loans, which means that the monthly payment that you're going to have usually ends up being a little bit lower than with other loan programs.
That's a lot of great information on USDA loans. Now let's talk about VA loans.
Sure, VA loans are one of my favorite loans to do. Not only does it involve helping veterans and their families, but they do not have a down payment, which is amazing. Also, they don't have mortgage insurance in their payment, and the interest rate is typically lower. Also, the requirements to get approved are somewhat lax.
So what does the credit score need to be on a VA loan?
Well, we can get them approved for at least a 600 credit score.
Okay, so they can get into a home with at least a 600 credit score, no money down, and a lower monthly payment with VA.
Yes, exactly. There are some requirements around your length of service depending on the time frame that you served. So let's have a conversation about that and make sure that you qualify depending on your certain circumstances.
So Brandy, tell us what other options buyers have for the zero down programs if they don't qualify for the USDA or the VA loans.
Sure, so there are several down payment assistance programs where the government pays for the down payment for the buyer. There are typically additional requirements such as higher credit score, usually 660 or higher, and income limitations.
So these programs are great for people that are ready to take that leap into home ownership, but they don't have a lot of money saved for that down payment. So since the down payment is being paid by the government, does that mean that they have to remain in the home for a certain period of time?
Absolutely. So one of the drawbacks to these programs is that the buyer often has a certain time frame that they're required to stay in the home, or they will have to repay that down payment back. So for example, whether it's 2 years or 10 years, depending on the particular program, essentially the government is actually granting you the down payment. And if, for example, if it's 3.5% down, at the end of that, you have not reached that time frame, you're going to have to pay back that 3.5% down in full.
So Brandy, what are the other drawbacks to these type of loans?
Sure, so the other drawback is that generally it's a higher cost loan when it comes to the rate and the closing costs. The rate is typically a little bit higher than the normal rate for a similar loan, and there's often additional closing costs. So please note that there are some instances where we can ask for the seller to contribute towards closing costs, so don't let that be a hurdle or scare you away from looking at this great option for first-time and next-time home buyers.
Thanks, Brandy. These programs are great ways for buyers to make their home buying dreams possible.
Yes.
Thanks, Brandy. Thanks, Tony. As you can see, there are quite a few different options, each with their own different requirements and pros and cons. It can be a little overwhelming, but we're here to help you through every step, so no worries. Make sure to watch our next video when we discuss one of the most common loan programs, the FHA loan. If you have any questions, give us a call, 317-414-9355. Thanks.